As the Honorable Finance Minister reminded all of us, monetary policy and fiscal policy goes hand in hand. And therefore, I'm delighted to have you for this very, very important conversation, especially given the fact that monetary policy is the hot topic in the world economy today. The elephant in the room, of course. We're talking about the US raising rates. We're talking about a slowdown in the largest economies in the world. So let me go straight into where Thailand is different, Piti. While the rest of the world is talking about soft landings, the Bank of Thailand, of course, is talking about an economic takeoff. Could we start by you explaining to our global audience today, watching this on live streams, listening to this in the room, how Thailand views the global economic situation, especially the slowdowns in China and the slowdowns in the United States of America?
Yes, thank you. So actually, firstly, thank you for the invitation. It's my pleasure to be here, an honor to be here as well. You're right, monetary policy is a very hot topic right now. It's actually a very interesting time to be in central banks because now we have a lot of things to actually analyze and decide on. In terms of the global picture that you mentioned, there's a big global component of things that are happening, but there's also very country-specific issues that are happening as well. In the global picture, of course, the inflation picture has a very much a global component, mostly from the energy price shock that we've all faced. But at the same time, the initial conditions and the starting point of countries are not the same. And you alluded to, in the case of Thailand, why we are now trying to have a smooth takeoff as opposed to a soft landing. And this reflects the fact that our starting point from the COVID shock is a lot more later or delayed compared to the advanced economies, mainly because our economy relies a lot on tourism, which was completely pretty much shut off, and then it's only slowly coming back. As of the second quarter of this year, so back in June, we only had about 2 million tourists out of the 40 million that we usually get. Right now, we are around up to about 9 million. So you can see that the trajectory is that we're only starting to recover, and we're not going to reach the pre-COVID GDP level until like early next year or end of this year. So the global picture is now changing. It used to be quite positive. Now next year it looks a lot more challenging, so we will have to actually navigate through that. But domestically we have a pretty strong foundation, given that we have this inbound tourism coming, plus the domestic demand that's going to carry us forward.
Yeah. Piti, you spoke about the starting point of the various countries are different. And surely Thailand is in a different place as well. But even in the US now, we're starting, the Federal Reserve officials are starting to talk about a moderation in their tightening. My country, India, is also going relatively slow on interest rates. Surely you must be feeling a bit vindicated on your monetary policy stance.
No, I think every country has its own challenge, right? So I think what the Fed has done, have done what they needed to do, because they did start off with a pretty big inflation shock, which was unexpected. I mean, I think if you recall, not just the Fed, but everybody here in this room, all the markets, as of last year, was forecasting inflation for the US and the Euro area around 4% of this year. Right now, it's going to be like around 8%. So it's pretty clear that there was some unexpected shocks that happened, and the degree of persistence of inflation in the advanced economies turned out to be more than people expected. So I think they have done what was needed to do. In the case of Thailand, I wouldn't say vindicated. It's more like we have been trying to apply a steady hand, really looking at the facts, incoming data, and the fact is, we do have a very different cyclical position than the other countries. In terms of our vulnerabilities to external developments, including the exchange rate, we are not that vulnerable given our limited exposure on foreign debt, that the pass-through to inflation is not that high. So we had this picture that we needed to first nurture the recovery, let the momentum gain, and then we could slowly, ease off the stimulus that was put on back in COVID. And so far, the overall picture has developed in the way that we had anticipated in the big scheme of things. So up to now, I think we are, comfortable, but I wouldn't say we are complacent because next year it's going to be a lot more challenging, I would say.
At what point would you think the economic recovery in Thailand has gained that momentum that you want? What would be the point that that smooth takeoff is just about starting?
Yeah, I mean, just going back to the tourist numbers, for example, as of June, we only had 2 million tourists. So that was like the plane was on the runway. Q3, which is the numbers going to be released next week, I would think that would be should be a confirmation that we are now actually, launching or taking off. And then we expect to be in like full flight probably early next year. So that, as the finance minister mentioned, we actually one of the few countries that expect growth next year to be higher than this year. If you look at the world around and the IMF forecast, most regions, most countries actually have growth next year much lower than this year. So we are, gonna be in full flight probably next year.
Before we get to next year, we have a very important date coming up this year, which is your November 30 review. Given all of the headwinds that we are facing, given the uncertainty, I saw on the Bloomberg terminal this morning, we had arguably what we could call an escalation in the war in Russia, Russia's war in Ukraine today. What could we expect from your November 30 review? How is the Bank of Thailand looking at this, a very important decision?
I think you could expect a continuation of the approach that we've been doing. We've been slowly easing off the accelerator in terms of policy. In the big picture, inflation is a concern. I mean, central bank and the rate of inflation that's above target is something that we really follow closely. But what's more important is the trajectory going forward. And next year, we do forecast it to come down somewhere near our target. That's mostly reflecting the underlying nature of inflation that is more supply-driven, it's not demand-led, and it's also, not the second round effects of wage pass-through is not happening. So we do expect inflation to moderate, but we really want to make sure that the recovery does not add to the inflation pressure next year. So I think the smooth, gradual withdrawal of stimulus is something you could expect. We get a lot of questions about where's your terminal rate or neutral rate. All I would say, it is not what it is today. So you could expect not to be surprised. We don't aim to surprise the market, and I think in the November meeting, it should be a continuation of the approach we've been doing since the beginning of the year.
Not surprising the market, a boring central banker in the hot seat today. I want to remind our audience at this point that you can ask any questions that you might have to Khun Piti as well. Please use your phones. You're aware of the process that Malika walked you through. So please feel free to ask any questions on monetary policy to Khun Piti. Because this is the gentleman here who's very famously said that central banking is 90% communication and 10% action. So I want to ask you a very pointed question, Khun Piti, and there's no other way to ask this question really. Has the Fed acted responsibly in its communication of its monetary policy, especially when it comes to the second-rung impacts on emerging markets?
That's a good question, Jeanette. Actually, firstly, that quote that 90% of monetary policy is communication is not from me. I think it was Ben Bernanke or somebody else said it. But it's a fact. In these days, much of the work of monetary policy is done by the market in anticipation of what central banks are going to do in the future. And I guess the challenge of communicating, well, if you start at the end, the outcome, what ultimately is the policy action coming from? What moves policy? It's two things. It's either circumstance change, the economic conditions change, or the preference of the policymakers change. They may put more weight on output, more weight on inflation, those things. I think the key challenge of communication is to communicate that the preference of policymakers, which typically do not change, that is like the foundation of how policy is made. Because if the market understands the reaction function, how central banks will react to different conditions, they can anticipate what policy would be in the future given their forecast. The other bit, the actual change in the circumstance, that's a different issue, and that's more hard to forecast. I think if you're referring to the Fed evolution of their communication, you could say from the beginning of the year, I think in the beginning they were more in the mode of actually trying to guide the market quite directly in terms of a forward guidance that kind of borders on promising or being perceived to pursue a particular path. And I think the issue with that was that it's very difficult for the market when the policy path became different than what was telegraphed to differentiate between the two factors that I said. Is that change in policy because circumstances change, or is it actually the preference of the policymakers change? And I think that caused them some trouble. So the Fed quickly adjusted, and it became clear that they want to make sure that communicate their preference, which is they're gonna have to take care of inflation first and foremost, no matter what, and based on incoming data. So I think they've adjusted to circumstances quite well. As I said, everybody in the world was caught off guard by what happened this year. But to their credit, I think they've done a very good job in adjusting. And now people are forecasting the Fed pretty well, I would say. Yeah.
That's an interesting comment, because that change in preferences, either in trajectory or in policymaker preferences, creates noise. How will the Bank of Thailand ensure that there is no noise in your policy making? There is no noise that confuses the markets, both here as well as in the wider Asian region? That's
a great point, Jeanette. I mean, everybody here in this room, it's pretty clear there's a lot of uncertainty that the private sector and households have to deal with these days. The last thing that we want to do is to add to that by creating policy uncertainty. So as I said earlier, we do not aim and do not want to surprise the market, but if it comes to having to do something that was different than market expects because the circumstance changed, then we will actually do it. But in terms of trying to be as clear as possible about the preference of the policymakers, that bit I think we can communicate, be transparent, try to describe how we got to where we are and how we're going to go in the future. I mean, all central banks try to do that. You see this long trend of increased transparency over the last decade. It's precisely to communicate the reaction function of central banks. So that's what the best we could do is make sure at least that the public does not misunderstand the preference or reaction function of the central banks, and that the uncertainty comes only from the changing circumstances, the economic backdrop. That's the aim, at least. But I think that's the best we try to do that. Yeah.
I want to pull back a bit and go to my part of the world with the South Asia. But before that, Piti, I want to give you a chance. Since you said you want to be transparent about your preferences, I would request you to articulate your preferences from the Bank of Thailand. Where does the Bank of Thailand's preferences lie right now?
Right. So in terms of, the Monetary Policy Committee makes the decision. The committee clearly looks at three. First and foremost, inflation is something that is the foundation for any sustainable growth. So that's the first thing that we really look at. The growth trajectory is also very important. Having sustained growth that's also, well distributed across the segments of society. And thirdly, financial stability is something that we also pay a lot of attention to because it matters for future growth. Not in of itself, but it's because it's an indicator of more medium-term prospects for growth. So those are the three things that always, is what the committee looks at. And the balance between those three objectives changed a little bit depending on the circumstance. Before, earlier this year, it was more about ensuring the recovery really takes hold. Clearly now it's going to shift a bit more towards making sure inflation does not become embedded into the system, which right now it looks like it's going to be fine. In the background, we always look at financial stability in the medium-term horizon to make sure we're not causing trouble down the road. So in a nutshell, at this point in time, it's stability. It's what the Bank of Thailand wants to try to achieve with its policy. Yeah.
Surely stability is easier said than done.
Very, yes.
Because the one channel, arguably, that has the most power to affect the stability is the FX rate. And very little really is in our control in a world where the dollar is so dominant. I come from South Asia. One of the countries I'm responsible for coverage is, of course, Sri Lanka. And while, of course, domestic policies play a part, we are seeing the effect, we are seeing the immediate effect of a strong dollar, which has led to really a heartbreaking debt crisis in the country. The Bank of Thailand has previously warned about a weak baht and the need to protect the local currency as well. Of course, in recent days, there's a smart rally in the baht. But where can we expect the currency to go from here? What are you monitoring very closely? Where could we expect the trajectory of the exchange rate to go?
You know, the first thing you learn in elementary macro is never forecast the exchange rate because as a profession, we have not been able to even explain, you know, in hindsight, what drives the exchange rate in general. But so, yeah, I'm not going to forecast the path of the exchange rate, but I'm going to say that the exchange rate is a very important variable. It's one of the most important relative prices for the economy. Especially for emerging markets, the exchange rate can matter a lot if you have a lot of financing or debt that is denominated in dollars, in foreign currency. If you have a lot of imports and a lot of pass-through from exchange rates, these are important channels, but it is quite heterogeneous across different countries. In the case of Thailand, the impact of exchange rate movements it has not been as pervasive as in, say, other emerging market economies, mainly because we are quite strong on the external front, as I mentioned earlier. We have very little foreign currency debt, even smaller in terms of short-term external debt. In terms, you know, foreign reserves are quite high. It's actually, I think, 12th highest in the world in absolute amounts, and if you scale it by GDP, it's about the 6th highest. The pass-through, the impact of exchange rate changes to CPI has been historically very low. I mean, very, very low. So in terms of our exposure to exchange rate from the financing side, from the trade side, it hasn't been a big factor. So in that sense, you know, we had let the exchange rate act more as a shock absorber in the past so far, up to now. But we would be concerned if the exchange rate becomes a shock amplifier. That's the threshold that we look at. You know, at some point, if the exchange rate moves way, you know, too much away from fundamentals, it may amplify things. That's when I think it becomes a policy concern. But so far, you know, it's been up and down. You had to have a steady hand and look through. But if you look at the baht to the dollar, it's weaker by 7% since the beginning of the year. If you look at on a trade-weighted basis, it's actually pretty much 1% higher, unchanged, basically. So, yeah, we have been quite resilient on this. And I think going forward, if I entertain a little bit, given our cycle is a bit later, so we're on the recovery path, as I mentioned, this is different than the rest of the world, where things are going to slow down quite a bit. You would think that that should be something that's supportive of investment in Thailand in general and the currency as well. So we actually think that there's a solid foundation for the country as well as for the currency. And
you spoke about investment coming into Thailand. Some numbers here. The country is net positive on equity inflows from abroad, about $5 billion this year. Thailand saw the highest weekly inflow into bonds since 2014 recently. So we're definitely seeing those inflows in. We're talking about a world where China is slowing and potentially trade flows might change a bit. Again, we're talking about potentially using the FX rate as a shock absorber. You mentioned that the exchange rate doesn't really become a problem unless it moves too much. What is your definition of too much?
It moves too much when it moves too much. This is the thing. There's no fixed level that you can just pinpoint and say this is the threshold where things become out of too much, because it's all endogenous. It's all part of the economic backdrop. So you have to always judge the movements of the currency relative to the ongoing economic backdrop. But when the exchange rate moves to the extent that it really, really causes some nonlinear behavior, for example, in the pass-through to inflation, that would be one example where it becomes a policy issue. Or if it moves to the extent that it creates some nonlinear effect in the financial market, really tightening of financial conditions, that would be a policy issue. But so far, it hasn't been the case in Thailand. For other emerging markets, it has been. Because the dollar is it's actually a risk aversion metric, right? So when the dollar goes strong, it's usually really financial conditions tighten up globally, typically, and that's bad for some emerging markets, but not so much for Thailand so far.
Piti, when I was canvassing my colleagues at Bloomberg for questions for the session, all of them told me one thing. They told me that the Bank of Thailand is a very astute observer of global trends. And therefore, I want you to ask this question that really is a big picture question. We have a war on in Europe right now. We have soaring energy and food prices. We are arguably moving from a unipolar world to a multipolar world. Is the structural nature of the world that we live in, the business climate that we live in, changing?
Very good question. I would say same, but different. So many of the changes that we see, they seem profound, including the geopolitical landscape. They're actually, I would view it as a continuation of something that's happened before the pandemic. Take geopolitics. We had Brexit. We had with President Trump, the Chinese-U.S. relationship was also already under pressure. With the globalization, actually world trade kind of flattened out already since the global financial crisis. So those trends were kind of beforehand. Technological progress that's happened beforehand is continued, and it's actually become I think accelerated by events, but those, in the big scheme of things, I think what we're seeing is a continuation or acceleration of previous trends. Those trends has been, in some sense, a tailwind for central banks in the past because they help to keep inflation low. Like globalization made production costs cheaper, stable geopolitics also made the cost of doing business lower. But going forward, those trends may actually start becoming headwinds. So I think for central banks, the issue is that before we were in the world of trying to have insufficient demand, now it's going to be more a world of insufficient supply.
Insufficient supply.
The challenge will be try to manage in a world where supply is less responsive than it used to be, and it's becoming more of a constraint. In the pre-COVID era, the central banks were running against a zero lower bound. That was the problem with stimulating demand. Now it's going to be like, we can't actually control supply. So it's going to be a different kind of challenge. Yeah.
A tricky job indeed, Piti.
Yes.
Good luck. Speaking from one emerging market to the other, good luck with maintaining that balance to ensure that, sticking with the theme of the event, that the last man or woman is not left behind. Thank you again.
Thank you very much, Jeanette.
Thank you.
Thank you.